How accurate is the information we hear about the housing market? And how can we separate fact from fiction? Only by delving into the details of the housing data can we truly understand the nuances of the economy. How do I distinguish between accurate and misleading information? What's the real story behind the numbers? Can building permits and housing starts really act as a leading indicator for the stock market? Just today, a great example. Left-hand side, new home sales ticked up in January despite elevated mortgage rates. Right-hand side, same news. U.S. new home sales rise less than expected. Lately, there has been a tremendous amount of bias in the reporting of the economic numbers, especially those in the housing market. Our goal here is to look at the data objectively without bias. Today, we see new one family homes for sale. This is the inventory, the number of new homes that are listed for sale. New homes, remember, are created by home builders. 456, it's reported in thousands. 456,000 shows a continued trend to the upside. However, on a year over year basis, we see really how great this number looks. On a year over year basis, we can see it's up 3.9%, the first positive number in actually quite a while. But wait a second. This shows us inventory is rising. Is this actually a good number? We're going to take a look at a couple other numbers that are going to give this particular report a lot more color. New one family homes sold. This shows us the velocity, the actual number of homes being sold out of the inventory. Also reported in thousands, 661,000. On a year over year basis, we can see really kind of lackluster, up only 1.8%. So the prior number, the inventory rising a lot, but the velocity, those actual homes sold, not so much. These homes are being produced by the home builder, but it looks like the home builder is not able to sell as many homes as they're making. Now we talk about the monthly supply. That's the ratio of new houses for sale inventory to the new homes sold. And we can see now we're sitting in an 8.3 month inventory. That means at current pace, we would need nearly 8.3 months to sell off our inventory. And this is actually a pretty significant high. Now we look to leading indicators, which tells us a different story. And just in a moment, we're actually going to see why the leading indicators in particular are so very important. New housing starts, the number of new houses where construction has been started. This is reported in thousands, so a little over 1 million. New privately owned housing units, housing starts for single family units. On a year over year basis, we can see up 22%. That's good. That shows us a lot of improvement in the housing starts, a leading indicator. Just like, by the way, the stock market is a leading indicator. Stock market, acts as a leading indicator in the sense that we buy stocks with the expectation of future corporate earnings. Building permits, another leading indicator. The number of new privately owned housing units for which construction has been authorized. A little over 1 million at this point. And on a year over year basis, we can see a steady trend to the upside, up 36%. In fact, this is the best number overall. However, let's put all this into context, and I'll ask all of you, and please feel free to chat in the comments as well. Let us know what you think. What have we learned so far? The leading indicators, housing starts and building permits are up great. Lots of indication of future construction. The new one family homes in inventory, that inventory is rising. Why not? The leading indicators look good. But the velocity year over year, it's up only 1.8%. The worst number are the number of homes we're actually selling. It seems that everybody is optimistic about the housing market except for the actual sales. The inventory is rising. The future expectation in terms of housing starts and building permits is rising, but we can't sell the inventory. Now, we spoke about this the other day in terms of the existing homes versus new homes. Today, we're talking about new homes. New homes are created by home builders. Existing homes don't sell very well right now. We call that the lock-in effect because the homeowners don't want to sell and roll themselves into a new high interest rate mortgage. But the home builders, the new home builders, they don't have that problem. So why do they have an 8-month supply? That's troubling. Now, why is it really troubling? Well, we spoke about this the other day. A study that we put together predicting a recession. Over the past few years, stocks have been very strong. At present date, what business reports are most closely correlated with these very strong stock prices? Well, there's a 54% correlation in new one-family homes sold. There's a 55% correlation in building permits, leading indicator. There's a 61% correlation in housing starts for total units, 75% housing starts for single-family units, 76% building permit single-family units. So the very strong stock market is most closely correlated with these leading indicators that are forecasting a very rosy future. Unfortunately, from what we've just seen, the actual number of homes being sold is very low. The inventory is rising, the expectation is rising. The question is, has the market gotten ahead of itself? Are the expectations ahead of the stock prices, I should say, ahead of the reality? Well, here's the leading indicators. Different way to illustrate it. These are housing starts, single family units. That's in white line. The blue bars show us the S&P 500, both rising steadily to the upside. The blue bar is also S&P 500. In this case, the white line building permits. Everything looks great, except for the fact this chart does not take into consideration the homes that are being sold right now. So the question is, what will change? Will the stock market and the leading indicators start to soften? Or will the lackluster existing home sales and new home sales begin to improve? Well, we spoke about this and many other topics in our Substack newsletter, substack.com. Just enter our information right here, and you'll see this among many of other publications predicting the next recession, learning from the past. In addition, this week we're watching durable goods and tomorrow S&P Case-Shiller Home Price Index. Now, the S&P Case-Shiller Home Price Index is especially important. This is going to give us another piece of evidence to answer the question, what we just spoke about. Are the leading indicators in the stock market, have they gotten too far ahead of the curve? Or will the current housing market numbers like S&P Case-Shiller Home Price Index, will that, catch up, so to speak? If this number is good, that could be a very rosy outlook for the future of the economy. If this number is bad, it could be further confirmation that maybe the leading indicators, including the stock market, maybe they've gotten a little bit too far ahead of themselves. We hope this has been helpful. We look forward to seeing you back soon.